Rivian just revealed one of the most important updates in their journey so far, and it might mark the exact turning point everyone has been waiting for. From fresh financial momentum to huge confirmation on the R2 timeline, this update could redefine the company's path over the next 2 years. If you care about the future of Rivian, electric vehicles, or you're simply curious about where this company is heading, stick with me, because what's happening right now could shape everything that comes next. Let's start with the new Q3 results. Rivian brought in about $1.56 billion in revenue, which is a massive jump from last year. They delivered over 13,000 vehicles and produced more than 10,000 this quarter. Production is scaling. Deliveries are scaling. The direction is very clearly forward and upward. But of course, the big question always comes up right away. Does this mean they're profitable yet? Not on the vehicle manufacturing side, at least not yet. But here's the part most people miss. Rivian's software and services business actually turned a profit this quarter, bringing in roughly $154 million. Think about that for a moment. They're not just building trucks and SUVs, they are building a connected ecosystem: charging, over-the-air intelligence, fleet and consumer software services. And that part of the business is already proving itself. If you look back at the early days of Tesla before the Model 3 scaled, the same pattern showed up. First comes the struggle to optimize production and reduce cost per vehicle. Then comes the moment everything flips. And the moment Rivian is betting everything on is R2. This is where things get genuinely exciting. Rivian has confirmed that the very first R2 test builds are expected by the end of this year. Yes, it's happening. These early production samples will kick off the next stage of development before the major ramp in the first half of 2026. That's not vague future planning anymore. That's a real, locked-in timeline. And to support this, Rivian is expanding capacity at their Illinois facility while preparing the Georgia plant for the true volume push later on. R2 is the unlock. A smaller, more affordable SUV that takes everything Rivian has learned: design, durability, adventure features, battery tech, and delivers it to a much wider audience. R1 vehicles proved what Rivian is capable of. R2 will prove whether they can scale that capability into a mass-market success story. If R1 is the dream, R2 is the execution. At the same time, the Rivian Adventure Network is quietly becoming one of the most user-friendly charging experiences in the country. Over 850 chargers now spread across 38 states, and soon they'll open access to other EVs. That suddenly transforms a Rivian-only perk into a revenue-generating business. It's almost a mirror of Tesla's supercharger evolution, one of the smartest strategies in the EV industry. Put this all together and here's the picture. Rivian is growing financially. Their ecosystem is expanding. The software side is already delivering profits. R2 is moving forward with real milestones. But yes, the company is still burning cash to reach that future. That's the trade-off. Short-term losses for long-term dominance. And right now, we are in the setup phase, the chapter that determines how powerful the payoff will be. When R2 arrives, that could be Rivian's Model 3 moment, the point where the entire perception of the company shifts from early-stage challenger to mainstream EV leader. The only question now is whether they can execute fast enough. Speaking of execution, let's talk about the person leading the charge, RJ Scaringe. His compensation plan has just been completely redesigned, and it sends a very clear message. Instead of guaranteed payouts, his performance-based package could reach up to $4.66 billion, but only if Rivian hits serious milestones over the next decade. Sustained profitability, scaled production, major improvements in cost efficiency, and stock price targets that climb all the way from $40 per share up to $140 per share. In other words, if Rivian succeeds massively, RJ succeeds massively. If Rivian struggles, he doesn't get rewarded. This aligns leadership with long-term success rather than short-term hype. And when you pair that with the strategic focus on R2 and operational efficiency, it shows Rivian isn't here to chase quick wins. They're aiming to build a legacy. There's also movement on the consumer side. Rivian has launched fresh purchase incentives for the R1 lineup, including a trade-in offer worth $2,000 off if you move into a new R1T or R1S by the end of November. And depending on your configuration, especially if you're targeting a dual max performance model, total incentives can reach up to $9,500. It's a smart play following the expiration of certain tax credits. Give the market a little breathing room, keep demand steady, and support buyers who have been waiting for the right moment to commit. When you step back and look at the full picture, Rivian's story becomes crystal clear. They are not announcing profitability today. They are building the foundation that makes profitability achievable tomorrow. They are tackling some of the hardest challenges any automotive startup has ever faced, and doing it while expanding technology, community, and capability all at once. This moment right now, this phase, is the transition from early strategy to true execution. It's the test. It's the pressure. It's the climb that determines whether Rivian becomes a permanent pillar in the EV world or just another ambitious idea that couldn't scale. And R2 is the turning point, the vehicle that could carry Rivian into the mainstream and change how millions of people think about electrification, adventure, and American innovation. So here's the final question. Will R2 be Rivian's Model 3 moment? Will this be the chapter we look back on and say, that's where the future began? Because whether you're an investor, a future owner, a current owner, or simply someone curious about where transportation is heading, the next 18 months might just tell us everything.